So we have already seen how to create journal entries. So now we'll see how to create ledgers. So for creating a ledger, so these are the items that we are going to create a ledger for. So what we'll do is, you can either create from the transactions, you can create a ledger, or you can use the journal entries to create a ledger. So what we'll do, we'll take the journal entries that we've already worked out, and we'll create a ledger. Okay, so we have our journal entries here. So one by one we'll solve them. So how to create ledgers? See, for every heading that you have given in the journal, you have to create a ledger account. So here you have given cash, so you have to create a cash account like this. Capital account, so you have to create a capital account. So for every account name that you have created here, you have to create a account separately. So you should be like having date. Here you have the date, then particulars, then again date, particulars, and amount. So I have not taken date here into account, so in the format. So for the proper kind of format, you have to visit the theory where we explained the ledger, how it has to be created. So we'll start from here. So we'll post this entry into the ledger. So the entry is cash to capital. So go to cash account, okay, and just type capital. So the amount you just enter on this side. So the amount would be 1,20,000. So now you have this amount, so you can take the amount and the reverse of it. Okay, so the entry is cash to capital, so it is cash to capital. In capital account, it would be by cash. It would be by cash. Okay, so that's about the first entry. So we'll move on to the second entry. So the second entry is cash to bank loan. So again we have a cash account. So cash to bank loan, the amount is 10,000. So on the opposite side, you should have a bank loan account. So here we have a loan account. So we'll name it as bank loan. So the amount is going to be on the opposite side of the bank loan account. So go here and just type again cash. So the next entry is machine to cash, because we have bought machine. So again, so whichever is the account on the top, okay, go to that account. So that is like easier to enter. Here you have cash, and the amount is 20,000. Okay, copy the same number, go to cash account. Okay, here you have bought the machine, so cash is going out of your business. The fourth entry was depreciation to machine account. Okay, so we have both the accounts here. So depreciation to machine, you can put the machine account, go to the depreciation account and just put machine here. And the amount is 1,000. So now go to machine account, and there you can put depreciation, the amount being 1,000. The next entry is cash to commission. So we have we'll go to the cash account. We'll go to the cash account and we'll just type commission. The amount is 10,000. So here it will be by cash. Again, the amount is going to be 10,000. So next it's going to be Rahul to cash. Okay, we are paying cash to Rahul. So rather than taking it to Rahul, okay, we will take this account as salary. Okay, we will take it as salary rather than Rahul. It's better to take as salary because there would be an adjusting entry we have to create. So better, I think it would be salary. Okay, we'll also adjust this in our journal also. Okay, so if this is going to be a salary, we should have a salary account. The salary account is already there. So the entry is going to be salary to cash. So we'll put it here to cash, and the amount is going to be 2,000. So we have to create another entry in cash account. For the payment of salary. So done. So we have done up to 6. We'll go to the 7th. The 7th is payment of salary through bank. So it's salary to bank. So we'll come here and the amount is 1,000. So here it's going to be bank and the amount is just 1,000. And in bank account, it will be by salary. Okay, it's 1,000. Okay. So up to 7 is over. We will go to the 8th entry. The 8th entry is cash deposited into bank. So it is bank to cash. It's 5,000. So we'll go to the bank and it's going to be bank to cash. The amount is 5,000. And in bank and in cash account, it's going to be 5,000 on the credit side. So again, another entry is over. So we have gone to the 9th entry. So the 9th entry is cash sales. Cash to sales, it's 14,000. So we'll first do it in the it's 14,000. And in sales account, we'll put it as cash. So the 10th entry is credit sales, sold goods to Murugan. So we have taken an item called as accounts receivable. So I have not created an accounts receivable here. Okay. So I will create now accounts receivable account. And I will also create an accounts payable account. So this is the entry I think we are with. So entry is accounts receivable to credit sales. So rather than taking it as credit sales, we'll take it as sales itself. So we don't need to split between cash sales and credit sales, or cash purchase or credit purchase. So we'll simply take it as receivable to sales. So receivable to sales. So that is going to be 15,000. And in sales account, okay, and in sales account we'll put it as receivables. So this tells that it's a receivable, okay, and the sale is for 15,000. Okay, so 2 entries are done. Now we can go to the cash purchase. So purchased goods for cash 5,000. Purchase to cash is the entry. So we can go here to the purchase account, type cash, amount comes to 5,000. Sorry, amount comes to 5,000. And we can go to cash account. There it will be by purchase. Amount is okay, amount is 5,000. So the last entry that we have today is credit purchase. So rather than having it credit purchase, we'll take it as simply purchase. So purchase to accounts payable. So we'll go to purchase account and we'll just type payable, which indicates that it is a credit purchase. So that is 6,000. And we'll go to the payables and we'll put purchase. Again, it's a 6,000. Okay, so we have ended the accounts here. Okay, so we have to close it and we have to get the total amounts. So if you want to close it, okay, you have to get the both sides, it has to be equal. Okay, both sides it has to be equal. So if you want to close, we'll close it like this. So to close an account, you go to the opposite side and just type balance so you type balance carried forward and you take the same amount and you put it on this side. Again, so this is like totaled here. So once it is totaled, again the same total 1,20,000 should be brought down and it should be noted as by balance brought forward. So some books will refer it as brought forward or brought down, or here it will they would refer carried forward or carried down. Okay, so it depends upon books. So that's about it. We have cleared one account. Okay, similar to that, we have to close all the accounts. So here it is not like fully tallying. Okay, so you have 1,54,000 on this side and 32,000 on this side. So what we do is here itself we have to put by balance carried forward, by balance carried forward. So the what is the balance amount? So you have to take 1,54,000, that is minus 32,000. The answer is 1,22,000. So 1,22,000 is what would be carried down. So it would be to balance brought forward 1,22,000. So this is a most important number here. So we'll close each of these accounts and then we'll get the answer. Okay. So by balance BF is going to be here 5,000. So we'll go to the next account. It's going to be loan. So from here on, it will be like very simple. We can just like here we have 10,000 as the account balance. So again, it's going to be 10,000 here, and it's 10,000 here. So the next one is machine account. So machine account, we can put we get 19,000. So 19,000 we'll copy. So next is depreciation. So next is commission. So we have salary account. So we have sales account. We have 29,000. We have purchase account. So purchase account comes to 11,000. So finally we have receivables account. Okay, so we have posted all the entries here. So what we will simultaneously do is we will ensure that the unnecessary things are like removed. Okay, so we have removed all the unnecessary to and by and elements. Okay,